Bismillahirrahmanirrahim. Assalamu alaikum once again. Second part of the video. The debriefing session is going on. The first part, we discussed how to read the question. The second part, a quick briefing related to the calculation part of the question. First of all, a quick overview about the requirement. This is what the requirement is. Prepare a report, and report includes the component of calculation and the theoretical aspects. So ideally start the working with the calculations, but do remember that either for calculation, either for theory, the important element is that you have to plan the question first. You have to plan the question first. Planning is the most important thing. So let's say, and ask yourself, have you read the requirement very precisely and understand the requirement accordingly? So always approach your answer according to the requirement. Approach the answer according to the requirement. Next 3 to 4 days, you have to practice with the same advices, whatever I'm giving to you right now. Okay, so the first part of the calculation, if we are moving toward the calculation part, so number one, the very important thing, we need to identify that calculation part, examiner asks 3 things here. Number one, technical marks, total 19 related to the calculation. Total 19. How? Number one, part A, 3 marks related to calculation. Part A, 3 marks. Sorry, part A, 1, 3 marks. Means calculation of the cost of capital that is discounted. That's by K.E. Ungeared by Morgnani Miller proposition 2. So calculation aspect 3 marks, number one. Number two, part A2, that is 14 marks. Part A2 is a major area of the calculation. That's, for example, part A2, value of the business of Milma company by free cash flow method using discounted calculated A1 without Bahari project and with Bahari project. Candidates, a most common question a student normally asks, sir, what if the part A1 we have done, if in the examination or during the mock exam we have done the wrong calculation with part A1, because part A1 discounted will be used for the rest of the part and all the question that will affect it with the part A1. Don't worry. You have to put your best effort for part A1. And what if the answer is 11%? Ideally, answer should be 11%, but your answer is 9%, or you have taken the wrong, you have calculated with the wrong approach. There's a concept in the AFM and SBR both exam that is called OFR, own figure rule. OFR, own figure rule, which means that if A1 is wrong, the answer should be 11%, but your answer identified 9%. Examiner will assume the own figure rule, that is 9%. Own figure rule, that is 9%, and take that assumption of the 9% and then mark the rest of the question based on the 9%. So simple words, if the part A1 is wrong, that's not affected to the rest of the part of the question. That's all. So second part, that is part 1, K.E. Ungeared by MM proposition 2. Part 2, valuation by without Bahari project, with Bahari project. And of course, this question is primarily considerable with respect to the listing of the shares now and the listing of the shares of 100 million. So whenever you are calculating the value of the company, you have to be aware that we need to calculate the total value and the per share value as well. Okay. And one more thing, very clear in your mind, if the Bahari project having positive APV, so that means the value of the Milma company will increase accordingly. For example, without Bahari, the project value, the company value 100 million, and the Bahari project APV value 5 million. So the value increases total value and the per share as well. So part 2, 14 marks, and we can split the calculation in 2 parts. Value of Milma without Bahari project, value of Milma with Bahari project, or the Bahari project valuation by APV method. Why APV method? We have covered with the part 1. Third, equity for debt swap offer. Valuable or fruitful for or advantageous to the unsecured bondholders or not. For this, we have to calculate the value of bonds. Value of bonds by redemption yield method. So typically, if we are going to start our calculation must be headed with the term use appendix. And there are 4 calculations. That's appendix 1, cost of capital. Appendix 2, valuation of Milma ignoring Bahari project. Number 3, value of the Bahari project and the total value of Milma. Number 4, value of the bonds. Value of the bonds. That's important. Without valuation of bonds, we are not able to assess that is this swap offer, equity swap offer valuable or not. So 4 parts of the calculation. Part A1, part A2, part A3. So first identify, yes, 4 appendix I will work on. 1, 2, 3 and 4. Here I am going to provide a quick briefing about how the calculation should perform with the sequence and what are the allocated marks. Even with this video, you can, by watching this video, you can check your answer, how much marks you have performed and how much, compare your solution with the ideal marks that I will guide here, and then sort out the things. If this is about 3 marks of the solution, you can mark your answer 2 marks and then total the marks accordingly. So that this sessions also provide you the support to self allocation of the marks. Okay, number 1, the first one, appendix 1, Milma's cost of capital using Ziva. We have already covered that. During the reading of the question, we identified that yes, we required KE ungeared and KE ungeared by CAPM or MM proposition 2 by proposition 2. So for Mordali Miller proposition 2, the formula sheet given here. No need to learn the formula. It's very clear. It's mentioned here. But what are the components required here? You required KE ungeared. So you wanted to calculate KE ungeared. So first you need KE geared, tax rate, debts value, equity value. So it's very simple. Number 1, KE geared is given in the question. It's very simple. It's available in the question. Sorry. With the Ziva. Geared cost of equity 16.83. Do remember we have to work out with the KE that is geared and identify KE ungeared. No requirement for any cost of capital of Ziva. No requirement. So don't make mistake. Market value of equity, Ziva, very simple. Market value of equity here, 200 million shares, trading $7. Very simple. Market value equity. Market value of debts, very simple. Irredeemable debts, 1700 million. 1700 divided by 100 multiplied by 105. Okay, so market value of equity, market value of debts, and then you will simply identify with the algebraic method or let the value of x accordingly to identify the value of the K ungeared, that is 11%, 10.93, 11%. Applying this particular formula. Applying this particular formula. Very simple. Sir, if we are working with the spreadsheet and applying this particular formula, you just mention 2 to 3 steps, or Just mention, for example, you have to identify in this manner. KE is 16.83. So with the spreadsheet, you can mention that is 16.83% is equal to KEIU required plus 1 plus tax rate. The tax rate here the 30%, sorry, 0.25. 1 minus 0.25 bracket, that is multiply you required KEI minus KD, that is 7%, and then simple value of debts, whatever the value of debts, divided by value of equity, whatever you have found, you will find according to value of debts, value of equity. You just mention this and you directly calculate on the calculator. It's not necessary to mention all the steps here. You directly you can calculate directly with the calculator, but this first step you need to mention here. That's very important. Ideally, the solution, the exam solution, perform with this manner with same structure. For example, no need to mention this. This is actually the model answer. No need to mention this on this formula directly. You just mention this. Oh, sorry, I put by mistakenly the 7%. That is 4.76%. I'm sorry, 4.76% of the ZEVA. All the values must be taken the ZEVA. Okay, and then if you wanted to add this step, it's your wish. Otherwise, you directly calculate with the calculator and put the values. It's very simple. Do remember that if you are engaging with the more steps here, you are actually losing your time. So no need to mention there. Yes, calculation of market value of debts you can mention. Good to show the working market value equity. That's good. No need to work out. No need to mention the tax rate. Directly put the tax rate. No need to mention the KE geared 16.83. Directly put this. But if some working you wanted to show, that's good. So this is the first thing. That is the first part. Sir, how much marks? The marks here, that is the 3 marks. 3 marks. That is 3 marks here. Don't worry, you will be able to get this document. This is the appendix 1. Appendix 2, very simple. Value of Milma without Bahari project. Without Bahari project. Number 1, free cash flow. You need, it's mentioned on the question, the value with the free cash flow. So what the things you need to cover here? The information without Bahari, that's available here. Very simple, free cash flow. So by applying the free cash flow method, always with the examination on, by applying the free cash flow method, you need to develop your mindset that we have to work out the value of the company here, value of equity here, value of equity. Number 1, value of equity here. So we require the free cash flow for equity. Sir, free cash flow for equity here. So interest, there will be no interest in the question because the company will become 100% equity finance. Okay, so free cash flow of the firm is equal to free cash flow of equity. Number 1. Number 2, split the calculation in 2 parts. Free cash flow, equity from year 1 to year 4 and year 4 onwards. Develop the mindset. Okay, so before entering year 1 to year 4 table or year 4 onwards delayed perpetuity with growth model, first of all, ask yourself, we have the ingredients or all variables given here. Number one, what variables we required? Discount rate, that's K 11%, that's done with part 1, A1. Number 2, the growth rate given? No, so calculate the growth rate. So here we required, number 1, growth rate by historic mean method. Historic mean, very simple. Take out the growth rate. Number 1, we require the growth rate. Number 1, the revenue. So just the geometric mean method. Take out the 389, divide by 3447, 1 over n. Here the n is 2 minus 1. So you will identify the 6.25%. Then examiner mentioned 120% of the previous 2 years average growth rate. So you will apply 6.25 into 120%. That's 7.5%. This is the revenue growth, 7.5%. So take out the value of 389.1 and then apply the growth rate 1.075. Sir, what about, this is for the revenue, and then start with the operating profit. About the operating profit, here mentioned with the yellow, operating profit margin expected to maintain in the future. So first of all, calculate the operating profit margin on the average basis. So you will identify one by one, 58.4 divided by 389, one by one, and take out the average. That is the average of 15% based on history. Sir, can we do that with the geometric mean method? No need, because here mentioned that operating profit expected to maintain in future. You just calculate all 3 years individually and then divide by 3. Sir, what about the free cash flow growth after 4 years? Here mentioned 3.5%. 3.5%. So after 4 years, the free cash flow growth 3.5%. So B and C, growth rate of revenue. D, growth rate of the free cash flow after 4 years. E, operating profit growth rates. These are the basic variables you need to identify. Then apply the things accordingly. First 4 years, simple. Take out the first 4 years means year 1, 2, 3, 4. Take out the sales, then operating profit based on 15%, then tax adjustment. No capital reinvestment adjustment for existing one. But for additional capital investment, yes, you have to work out $0.3 per dollar change in sales. And after that, using delayed perpetuity with growth. I must say, do practice for delayed perpetuity with growth as much as possible. It's a very norm with the questions. Okay, so based on this, you will be able to get free cash flow valuation 564.3. It's very simple. These are the values. First 4 years and after and after 4 years. Total value 564.3. These are the basic working. Very basic. Sir, what are the marks? Sorry. The marks are for all these working. These are 2 marks for growth, operating profit, rates, all these things. Free cash flow, complete tabular working. First 4 years, 3 marks. Delayed perpetuity, 2 marks. Total and with delayed perpetuity, 2 marks. If you have done something wrong, the marks with that particular step will charge as a wrong. You will be penalized as a wrong for that particular step. But next step, if you do the right things, the procedural marks will continue with own figure rule, OFR. Okay, next. Appendix 3. Examiner says that what is the value of the company after Bahari project? So why not to identify the Bahari project value? So value of Bahari project. Number 1, prepare your mind. we have to work out by APV method. Sir, why APV method? Because the question is structured in this manner. Although it's not clearly mentioned use of APV method, but all the things that subsidized loan and like this, whenever the indication about the subsidized loan or the debts matters, you have to apply with the APV method. So APV method, simply need to calculate APV of the Bahari project. So this is the approach. Base case NPV. Based on these information, whatever the available, that is a number one. Here the concept of APV, first apply the base case NPV. For base case NPV, the Bahari project has a limited life of the project, that is 15 years. 15 years it's mentioned. And here mentioned that 4 million in the first year, 100% per year next 2 years, and then 15% each of 2 years. So these are the data of the 5 years. And then stabilize for the at the year 5 level of remaining 10 years. Okay, so first 5 year, after 5 years delayed annuity, and based on this first 5 years 1, 2, 3, 4, 5, and then 6 to 15. Apply the annuity. Simple. So base case NPV you have identified 120.5. Discount rate same 11% as mentioned on the requirement. And for these working you will be get 3 marks. But this is base case NPV. What about the financing side effects? This is the second one, financing side effects. Very simple. Tax shield and value of subsidy. It's a norm working of the APV. Tax shield, that's of the interest. Value of subsidy, subsidized loans. Here all details available about this. For the Bahari project. The Bahari government has offered subsidized loan 15 years, full of 150 at interest rate of 3% instead of normal borrowing rate. So first thing is tax shield from the subsidized loan. That's independent concept. Number 2, value of subsidy loan. That's an independent concept. So apply 15 years annuity factor with the cost of debts, and you will be able to get the things accordingly. Tax shield and value of subsidy, annuity factor 7%. The financing side effects having the marks of, okay, one by one. Be careful, for financing side effects, tax are not delayed, and total value is 51. Do remember that the project having the investment of $150 million. Very important, 150 million. But first you calculate the base case NPV. With the base case NPV, the project only value 120.5. That means base case NPV, I must say base case present value. It's not enough to meet the cost of project. Or I can say base case NPV is negative. 120.5 minus 50 is negative. But the financing side effects, adding the value of financing side effect, adding the value of 51 million. So overall APV is positive due to the reason of financing side effects. That is important here. Due to the reason of financing side effects. So for all financing side effects, there are total 3 marks, and final APV calculation 1 mark. So total APV calculation 3 marks, 1 marks, total 7 marks here. That's important. That is the point of calculation part. Then appendix, this is what about the base case NPV. Then appendix 4. Appendix 4 is about, what is about the appendix 4? Here you need to work out, no, very important thing. What is appendix 4? Actually, with the part A3, we have to make comment or advice either for unsecured bondholders. Is this acceptable to swap the debt with equity? So it's very important if we are going to advise here. So swap equity to debt means exchange the debts with equity. So number one, we have identified the value of equity here of Milma. Now for exchange, we need to determine the value of debts. So any of the parties going to exchange something, if you are going to exchange your cell phone, what you should do? Number one, determine the value of your own cell phone and determine the value of what you are getting from exchange. So here, the unsecured bond need to identify what is the value of existing bonds and what compare with the value of the shares we are getting from this exchange. So that is why we are here to identify the value of bonds. If something about the value of bonds, automatically value of unsecured bonds, that's a concept of redemption yield method. Redemption yield method means present value, future cash flow, interest and redemption. In this question, there is no complexity of the changes in the yield. The yield is straight flat. Flat means one discount rate will use. That is KD 7%. So this is appendix 4. This appendix 4 having 2 marks for the redemption of the bonds. Okay, this is the briefing about the technical part, technical marks of calculation aspects. This technical marks having 19 marks. Sorry, this is actually the calculation part of the question, and the calculation part I briefed the technical aspects of the question. Now the second important thing, sir, with this calculation part, what about the professional skill marks for calculation part? Number one, if this is something 19 marks for appendix, you have a margin to get 3 marks of the professional skills related to calculation. But be conscious about these 4 points. Number one, all the appendices must be well labeled. Appendix 1, cost of capital. Appendix 2, Milma value without Bahari project. Appendix 3, Bahari project value and total value of Milma. Appendix 4, value of debts. Well labeled. Use spreadsheet functions, sum, IRR, NPV. In the case of option model, use the option calculator. And as max as possible to incorporate right data from the question. Means you are attempting the question by getting these informations. For example, growth rates. So you are getting the data from the growth rates and incorporating with the spreadsheet. So catching the right information and incorporating with your answer. That means try to incorporate right data from the question. And structure working. Structure working means at the left side, for example, at the left side you are working with the main contacts. For example, APV value, and the right side you had it with the workings. And whatever you are doing at the left side, main working, you have to well reference of the working 1, working 2, working 3. For example, if you are working with the free cash flow and you need to work out for the growth rate, so you mention working 3, growth rate. So here working 3, growth rate. This is called well structure of working, well arranged. So that is about the professional skill marks of the question. Professional skill marks of the question related to calculation part. So this is what about the debriefing about the calculation aspects, including debriefing about the calculation part of the question, including technical and professional skill marks. So wait for the last video, third one, how to handle the report writing and the theoretical content of this particular question. Thank you. Take care a lot. Assalamu alaikum.